Investing in the stock market sounds complicated, right? But what if I told you it's actually one of the simplest ways to build long-term wealth? Let me walk you through the basics, fast and clear. So first, what is the stock market? It's a place where companies sell ownership in the form of shares to raise money. When you buy a share, you own a piece of that company. If the company grows, your investment can grow too. And yes, prices go up and down. That's normal. That's the market. So, how do you get started? Step 1. On a brokerage account. This is like a bank account, but for buying and selling stocks. It can be done online in minutes. Many platforms offer zero commission trading today. Step 2. Start small. You don't need thousands of dollars to invest. Start with what you can afford. Even $50 or $100 a month is enough to begin. The key is consistency. Step 3. Choose companies you understand. Do you use an iPhone? Maybe Apple is worth looking into. Use Google every day? That's Alphabet. Invest in businesses you trust and believe in, not in hype. Now, here are 3 golden tips for new investors. First, don't try to time the market. You don't need to catch the perfect low or high. Nobody can, not even experts. Second, invest regularly. Set a routine, weekly or monthly. Automatic investments help you stay on track, rain or shine. Third, diversify. That means spread your money across multiple companies or sectors. Don't go all in on one shiny stock. A well-balanced portfolio protects you when things go sideways. The truth is, investing is not gambling. It's not about quick wins. It's about long-term growth, compound returns, and patience. So if you're ready to grow smarter and build your future with strategy, start today. And subscribe to NeuroStock, where investing gets clear.